Good morning, everyone. I'm a little early starting this off. The YouTube getting it going, it was like kickstarting an old motorcycle. I had to try like 6 times before I get a stream started. Oh boy, lots of fun. How's everybody doing this morning? You all had a good weekend? Just anchoring VWAP. I use the just the anchor off the Globex Open, the open of every 23-hour session. Yeah, just easier for me that way. I'm a big fan of anchored VWAP and stuff like that, but I have to keep the number of things I'm looking at on my screen down to a few just so I can execute. Otherwise, you're just looking at too many things, nice and simple. Even here, you'll notice I just mark where VWAP is. It's at around 18. I know we've run into a seller, did a look above and fail of the previous day high, right? We have some single prints where we took that old overnight high, right? So the short position, if you're a short seller, right, and you weren't using a stop, you were using the overnight high, and that's where you had your quote unquote mental stop. Or if you're a size trader, they don't use hard stops. So they'd be bid to cover between 34 and a half and 37, and that's what you're seeing right now. So the candle chart can show, look at how the offers are lowering, lower and lower and lower. As the market offers lower, you guys get that trend line down, right? That means that sellers are competing. That's what you want. When you're a short seller, you want those highs to be lower. That means sellers are competing and going, hey, wait, he'll sell it to you at 44. I'll sell it to you at 43 and a half. Hey, pal, come here. Hey, look. And then you get that little green candle where it runs out of supply and they sell into it right there, right where they did before, right? So if you're short off the 48s, 50s, right? If you're short of the look above and fail of that high, then you're looking for back down. Now, overnight inventory was short. Then it's not completely long yet because we haven't moved the point of control above the close of Friday, right? The bulk of the trading, let's go take a look. The bulk of tonight's trading is below the close of Friday. So this was, right? What do you do when you have product? You take that product from 5,600 to 5,620 and you try and sell it between 5,620 and 5,640, right? That's how you make some cash, right? Simulating market is tough. Hey, Kevin, good morning. Welcome to the folks that are joining us in the room and on YouTube. So, hey, I tried to download that Epic pen. It wouldn't take my password. So, anybody else have anything else to use to mark up a screen? That would be wonderful. That'd be really great. So, look how we caught those bids. See how that old overnight high is here, right? I left it there just to show you folks that when you take that old overnight high, those who are trapped short underneath it will come in and start buying this area here. That's called front running. That's why the market stopped going lower at 36. It's not because buyers are defending that, right? Nobody defends price by stepping in and buying. You defend price by taking your foot off the gas pedal if you're a seller, right? Because you know that they're trapped here. So as soon as you see bids, you're going to move the offer away from the bids, right? That's what your job is. Your job is to move the offer away from the bids, get them to pay more. Now comes the question of the rollover. So Okay, I have not rolled the contract yet, folks. Okay, what I'm doing is I'm waiting for the volume in the new contract, which is the M contract, which is a 286, to catch up to the H contract, right? So that's why I was going to roll it today. And then I saw the volume's considerably less in the new one. So I'll wait till the volume catches up. And in the meantime, I'll do what I should have done on the weekend, was roll the contract over on some of my charts, double check all my references, double check all my balance levels, readjust everything. Now, for those of you who are in my trading room, there is a detailed video on how to roll over your contracts. I'm an inventory trader, and so are you, even though you don't know it. I like to use volume-based rollover, back adjusted, and what is it? Volume-based rollover, back adjusted. Where is it here? Let me just get you the exact setting. Continuous futures contract, volume-based rollover, back adjusted. Works for me. See how X period came right to that old overnight high? And it hit the brakes within one tick. And that's the beauty of electronic execution. Isn't that amazing, that a market where there are participants from all over the world, and it stops right there to the tick, right at the old overnight high, and walks away from it, making those people pay not 35, but 36, right? Get them to pay up, right? Let's see how desperate they are, right? It's beautiful commerce, beautiful. So, have everybody keeps asking me, have we found a low yet? Is there a contest? Like, do you get like a year supply of chocolate bars or something if you call the low? I don't know, because everybody wants to know. I don't know. I said in the video I made this weekend for the weekend update, 55.84. If we can stay above that, that's meaningful. If we go underneath 55.84, we'll see some more selling. Right now we're staying perched over 56.20, but I want to alert you to this situation at 56.47. Take a look at this high, this high, this high, and this high, right? There's been a constant seller at 56.47 to 50. If we break over that between 56.50 and 57.24, there's just this thin bit of volume. So the question is, what is lurking for inventory between 50 and 74? I don't know until we get up there and poke around and get hit with some order flow. Until then, I can't tell you what's up there. Wish I could, right? But I don't know. So if we do get over 50, be a cautious long, right? So how do we make money when we don't know where the low and the high is? That's why I like day trading, because I don't care where the low and the high is. All I care is, where's the inventory and where are we? Are we sitting on top of the inventory or underneath the inventory? So if you're sitting on top of the inventory, like we are right now, that's the blue crap, right? The value area. That's where 70% of the inventory of the trading session is priced. Friday's inventory, right? 70% was priced above 5,600. Then what happened was, during the cover of night, people who were short underneath 5,600 averaged up into the close and were able to cover during the nighttime, right? That's why we can't get under 5,600 and stay there, because there are short covering bids, right? And look, position, right? A little bit of a sale to bring people in. Sale brought in buyers. Sale brings in buyers. When the sale brings in sellers, then we got to worry, right? Like it has been for the last couple of weeks, right? The fire sale has brought in more sellers. So look at that. We hit that X low, hits that overnight high, the old overnight high to the tick. Rotating back up, the upper stops are at 42, which is right here on the old candle wax, right? There's your 42 candle wax level. Now, let's see who comes to party at 42, right? So if we creep up to 42, we are expecting people to sell at 42. Look, they're already front running 42. They're selling ahead of it, right? This is just simple market mechanics. There's no mystery here. Anyone who's traded size will tell you the same thing, right? You sell a market down to where you find large bids. When you find those large bids, you lift your offer and make them pay more, right? This is how and that back and forth motion is called the distribution of inventory, right? We're just here to sell you as much as we can, as high as we can, for as long as we can. You understand that. That's all you need to know about market making. So you want to trade with, right? So if you were long, say you were using 33 and 3/4, the bottom of my zone. Say you were thinking, okay, I want to go long, quick scalp. Maybe I go long 36 and I go and I stick my stop down here, right? So say you're long 36, put your stop at the bottom of that candle or that candle, right? And then put your sell orders out. Long 36, give them a little taste at 38 and 1/4, right? Sell a little bit at 37, 38, 39, right? Buy 5 contracts and sell one every tick above 38 or every 2 ticks, right? Get rid of your inventory. Well, the thing is, how worried are you about that low, right? Are you long some size off of that low? If you're not, don't worry about it. What's the time frame of your trade? Are you trying to put a position together for a swing long? Then maybe worry about it. If you're day trading off of, you know, just trying to make your rent, don't worry about it. When you would do I do the rollover? I just said, Kenny, if you're just joining us, I just said when the volume in the new one takes over the old one. Should have another day, I think, in the old one. I was going to do it. I did the morning session on the old one. Then I looked at the volume and it hasn't really, it's still 100,000 contracts more, not 100,000. What is it? I had it up here. Right. So the old contract is 362. The new one is 298. So there's still, 60, 70,000 contracts behind. See what I mean? That'll catch up. And for those of you in our Microefutures room, there is a detailed video on how to do this, how to redo your levels, right? Contract rollover can be dicey. So the other thing about today, are we going to get a big rip, right? Are we going to sell down? Is this thing going to turn over and do a gator roll and eat every long that took the position in the last 48 hours, right? Here's the thing. It might just go sideways. There's a Fed meeting. There's contract rollover, right? So maybe people are just trying to clean up old business before rollover. Make sense? Hey, Jam, what's up? Right? Maybe they're just trying to clean up, you know. And don't you have the Witches of Eastwick on Friday, right? For the options folks? See how we're starting to creep over 42, right? The offer's lifting, right? So if you're long 36, 37 against the bottom of that green candle down there at 35, right? Sell into this, right? Get paid. Yeah, just let the market tell us. Depends to bias on what when you got into the trade, what did you envision for the trade? What was the thesis of your trade, right? You knew where you were getting on the train. You got on the train at the right spot. Now, where are you getting off the train? Right? That's up to you. Right? For the rest of us, we just trade from level to level. One good trade at a time. Keep life keep life simple, you know? Congratulations on those trades. It's great. You're doing well. See that 42 seller, they're still there. See how we stuck our head up over 42 and boom, they came back. Right? So we know there's a seller at 42. We know that there's a seller at 47 and 50. Look, they were there earlier, right? And we told you, like, when did I put it in the room that they're going to be sellers there, right? You know, we do this to help you folks. I don't think I can post a. So right now we're just backfilling. That's why if I was long 36, 37, I'd be gone at 40, 41, right? There's nothing wrong with that. Emu, it depends on your setup, your risk tolerance, you know, 36 to, you were taking it long, short. I don't know. Balance zone level was 32 and 3/4, taking 36. Oh, well, I'd wait till off the open. It's hard to say, but I like to look below and fail. This trade was not a look below and fail. If I was buying 36 here, right? It's a fail to actually hit the level. So that's why you buy it. You put your stop under here, and then you sell into the rotation up because the market's going to rotate up. So now, do I buy it again? I don't know. Wait till you get down there and test it, right? I'm not a wizard. So I have no idea what the hell's going to happen when we come to 35. If we come to 35, some knucklehead could fat finger 5,000 contracts and we'll be down at 22 before you can say Jiminy, Jiminy Crockett or whatever, right? So I have no idea what the hell's going to happen there. You got to wait for the market to tell you, right? That's what everybody wants to be a fortune teller. But trading is about letting the market show you the way. So does it get down to 32? Maybe. But at 38, I have no idea. Hey, Zazu, overnight inventory is mainly short. It's corrected up. And now we had the counter correction trade from 49 all the way down to 35. Little bounce off 35 where they stopped selling. Back up to 42, right? It's good business. It's good business. Right? Here we go. So someone was looking for a 32 long. We got to get past the goalie at 33 and 3/4 first. Now, I don't like to trade too close to the open. Right? I like to close out my trades before the open, let the market open, right? And see who comes into the store, right? Everybody talks about order flow, right? Order flow is just a really fancy way of saying, hey, who's coming into the store, right? What are the customers like? Are there a lot of buyers? Oh, cool. Line up. Let's raise price. Oh, no buyers. I guess we're starting to mark down prices, right? Remember, folks, it's a market. It's a market. When the offer starts lifting and price starts moving higher, it means that those very nifty computer programs have seen buyers. So they're raising price. Hey, ZR1, good morning. Let me know when you want your one-on-one call today. Now, the way we trade at Microefutures is we like trades that kind of bang us over the head and say, take the trade. So we love when the market looks below 56.33 and 3/4 and comes back up. Then we can buy 34.35 against 3/4, sell 39, sell 44, and sell it on the way up. That's called a look below and fail, right? So right here, for me, there's no trade. That's cool. 27 to 20, 56.27 to 56.20. Yeah, okay. That works. Now, your balance zones don't have to line up with mine. All you got to do is remember it's the same 5-step method. Find the balance zone, watch it. Is it working? If it doesn't, scrap it and do a new one, right? Sit and watch it. If it's working, then do a couple of test trades with the micro, see how it works. Also, to see if the balance zone's working, let's see how you're working, right? How are you doing, right? How's your inner player doing, as Cat Williams would say, right? How are you doing? Is your brain working? Are you caffeinated? Are you angry about something? Are you fearful that if you don't make any money, it's a bad day, right? Are you overreaching? Are you seeing things that aren't there? Is your execution good? Is your execution bad? Right? Ask yourself these questions. It will save you money because if you're executing like crap, don't keep trading. You have to self police. That's why people lose money unnecessarily because they don't stop and ask themselves questions. They just kind of go in this blind rage. But you don't do that in any other business, so don't do it here. I look for the market to come back up over a level and for the offer to start moving higher. See, now the offer is moving lower, right? Do you see how the red line keeps going lower and lower and lower, creating the top of the candle? I want to see if the sellers cleared out. See, now watch. See how it stopped selling as we came down to 33 and 3/4? But would I buy that just yet? No. And not 7 minutes before the open, right? That's also coming right down to that overnight high where the shorts are trapped. So the buying at this 34, 35 level, that's short covering, right? So I'm not going to trust shorts to cover, to stand in there. Because if the shorts see any kind of selling size, they'll drop their bid so far fast under 32, it'll make your head spin, right? That's why I sit and watch. I like to look below and fail. When it fails, it means the orders under 33 and 3/4 are complete for the moment. So you grab a little long, right? There's no supply under 33. Grab a little at 34, right? Now, if it starts selling under 33 and 3/4, you know to get out, right? Because the business reason for your trade is gone, right? So then you're not holding on to a bad trade, right? Once the business reason for the trade goes away, why are you in the trade, right? You got to get out of bad business decisions. Trades are business decisions. They're not games of chance, right? Longs work because there's no supply. Shorts work because there's too much supply. It's really, really simple. but it sure as hell ain't easy. So we got sellers at 36 and 3/4 right now. We've got some bids underneath that 34 level where the shorts are trapped from the old overnight high, right? Let me just take that and properly mark it just so you can see where the new one is, right? But that area right there, that's why there's buying there. That's short covering. So you can't really rely on that for too much. The first time there was short covering, nice move. Second time, now they might be greedy. They'll go, you know what? Maybe we don't want to pay 36 to cover our short. Let's see if we can drag it out of them at 35. And if the sellers are desperate enough, they will lower prices, right? Because if they start competing, the sellers will drop that red line, the offer. See how the seller came down here now from 36 and a half to 36, the group of sellers, right? There you go. There's price competition, right? You want price competition lower if you're a short seller. You want that offer moving lower, right? So say you were short 38 against 39, 39 and a half, right? As long as that offer is moving down, right? If you're short 38, go put some 34 half bids in, right? Cover one at 3/4, cover one at half. Pay yourself because you know that there's buying here. So wouldn't you come in and start buying a little bit, right? Pay yourself. That's a nice trade. You don't have to make 40 points a trade to make a living. You do 2 to 3 points on 3 to 4 E-mini contracts once you learn how to trade. You'll be fine. You can do those trades and not drive yourself crazy, right? Trade, learn how to make a living, learn how to just get paid, right? And learn how to manage risk so you're not out there on the raw and ragged edge, right? Trying to make 60 grand a day when there's no reason for you to be making that kind of money. You don't have the skill, right? You don't have the account, you don't have the skill. Keep it real. Make a living, right? You can do really well if you just employ some practical common sense business. See how we can't get down to 33 and 3/4 because they're front running it. So the buyers are paying 35, 35/4 because they can't get any supply at under 34. That's why if I was short 38, I'd be covering here instead of waiting for this to happen. Because what happens is if they run out of supply or more buyers show up, the wholesalers who are long or the sellers who are net long will start to lift the offer. So far, you're okay. When the market opens in a couple of minutes here, what I want to see is I want to see where the bid is, right? Where the big buyers are when the market opens. Now, you don't need any kind of goofy software for that. All you need to do is watch your candle chart. We'll find the bid and I'll announce when we do. Why is it important to find the bid? Well, because if you're short, you always want to short down to where the bid is. The bid right now is 34, right? And if you were long on that move, right, 34, 35 to 42, nice. Simple, 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 simple. See how those shorts now, they're like, not going to get fooled again. Now we're coming under 33 and 3/4. Let's see if that offer stays under 33 and 3/4, right? We're going to open and we'll possibly be coming down, right? VWAP's down here at 18. Let's make sure that it's still there. That's where we left it. Okay, so it's up a little bit at 19. There it is. There's somebody outside my window playing fiddle music. And it's okay for a while, but not for like a straight hour. It's a bit much. Yeah, pretty much, Emu. You're trading with the smart money. Why fight them? Right? So when they are done selling, you buy a little bit. They raise price, you sell into it. When they're putting it on sale, you short, you sell alongside. You guys ever heard the term selling alongside? Like when you sit on a trade desk, one of your buddies might have a 5 million share sell order and you go, "Hey, do you mind if I sell a few alongside? I'll pay for drinks." Right? He starts his sell order at $10. He's got 5 million shares to sell. You short 10,000 shares at 10, and then he knocks it down to 9.5. You cover a little bit. He knocks it down to 9. You cover a little bit more. You're selling alongside. You're buying alongside, right? And you let them do the heavy lifting. You can't lift anyway. We're retail, right? All right, here we go. Fresh week, St. Patrick's Day. Let's see where the bid is. Right? When the reason for the trade doesn't exist, get the hell out. Let's see if we hold that 32, 33 level, right? Do I know who's going to come in the door? No, I don't. I have no clue. So if I'm looking to take trades, say I want to go long here, right? Well, that's the first minute. Do I really want to be first through the door putting on risk? Maybe let the candle open. Maybe let a couple of candles open and let's see where the buyers and sellers are. Okay, so we got bids at that 33 again, 33, 34. That was nice, right? If you missed it, don't worry. It's going to backfill, right? And when it backfills, you can pick some up, right? And when it goes to the next area, right? There's a seller at 40. So it's going to come back down now, maybe 36, 35. Let's see. So there's a seller right there, right? So if you are long, put your sell orders out. I just grabbed one micro at 38 and 3/4, and I didn't sell it where I should have. I got out at 40 and 3/4 now, right? I was a little slow, right? Now the sellers are here, right there. See? Where they sold before, they will sell again because they have product. They just don't have one or two contracts. Then the offer will lift here. You see? So overnight inventory, we took the stop at 43, right? They're going to sell into that now, right? And if there's enough buyers, they'll scale it out. See, look, next stop, right? 45 and change. And then next seller will be up here. See, if you're long, just sell into this. Beautiful, right? If we take out Friday's high and get accepted above it, then we'll just double the zone. Right now, this is the accumulation zone. The green zone is the profit zone. So then you just double it again into 4 times profit. Right? It's really simple math. You don't need to be an expert at math to figure this out. You buy your cheap crap, you sell it at a profit. 2 times profit, 4 times profit. Make sense? Now, I'll be looking because I know my levels work. Let's see at 54.25. Will they stop? Will the customers stop coming in? Let's see. So now the trade I would be looking at, do I really want to buy it at 4 times cost basis? Only if there's a ton of buying that'll push it up to maybe 60 or 64. But right now, I see a seller at 54 and a quarter. See? We need to clear out the 54 and a quarter sellers. To do so, we need a good chunk of it of order flow to come in. You see how they're selling on the market profile, you can see the volume, right? 582, 600, 700, 600. Yeah, I was hesitant, right? It doesn't mean it wasn't a good trade if I didn't take it, right? Maybe I missed it. Maybe I talked myself out of it. Maybe I'm being hesitant because it's Monday and I got a bit of weekend brain. You know what I mean? So I'll write that down in my trading journal, right? If I understand that a market that I'm missing obvious trades, yeah, maybe I need to work on my discipline, right? Make sense? Good question. Now, if we accept over 54, 55, and if you're a breakout trader, say you like to buy breakouts, right? Well, if we break out and stay over 54, then your next target up is around 58, 59. Just make sure you sell into it, right? So, maybe you get a bad fill at 56. Put your offers out at 58, 58 and a quarter, 58 and a half. Sell into the strength, right? Sell into that strength. Beautiful. See? That wasn't a look below and fail. That was a look above and go. And that's how you manage a breakout, right? If you buy it and it's holding, put your sell orders into the breakout. So when they come for it, you let them have it. Right? I'm never afraid to sell. Right? I've learned a long time ago to take profits. Try and take some profits every day. Because there are days where you won't have profits. So just take them when you get them. Right? It's wonderful to hold trades for longer. It's wonderful for, to hold trades, like 100 contracts. I'm holding it for 30 points. That sounds really great. Doing it is another story. I would just prefer to get paid, right? Little humility is the best risk management. Now we're going to backfill. So everybody see what's going on here? We're taking that inventory from Friday, from all the days underneath here, right? And we're going into that zone that I told you about. Remember? 56.47, right? Up to this 57.24 area. This area here, let's go see what's up there. So far it's fairly thin. Right? Now we're going to backfill. I'd suspect down to 60. See that little thin spot? Bet you that's where they swept the book. Right? And then we'll use the stops. And for market profile traders and people using a half-hour candle, you can use these upper stops to tell you where you can expect resistance, right? Like right there. Okay, I got that right. Right. So the upper stops from the 13th will help us. See, as we get up here, it offers lifting into that stop. You guys in the room seeing this? Hey, Dan, how you doing? So don't worry if you miss trades. It's not a big deal. You're always going to miss trades, right? Just that should, after a while, it should just roll off you, right? You missed a trade, great. Where's the next one? Remember, you're at work, right? It's not like you're going to take one trade and retire, right? Looking for 56.67 and a quarter. And let's see what we do when we get to that stop. Yeah, it's St. Patrick's Day. I'm in Liverpool and it's like nonstop fiddle music outside my window. So they're front running that stop because, I mean, hey, let's face it. If I was long 60, I'd be selling here too. When we take that stop, it'll create some buying. There it is. And they'll sell into it. And they'll sell down to where they find the bid. And when you find the bid, you'll lift the offer. Here we go. Down, down, test, test, test. Right? Oh, there's some buyers at 64 half, 65. Let's make them chase it up to 67. There you go. Yes. Right. So if I'm hesitant and I write it down in my trading journal, right? And if it happens more often, then I have to get disciplined. Any particular exercise? Um, yeah, just sitting in front of the computer, closing all social media. Don't look at your phone, right? I'm a little distracted because I'm on stream right now with you guys. It's not an excuse, but it's something that I have to get better at taking trades while I'm on stream because I do get distracted. Because I'm looking at the questions in YouTube, I'm looking at the questions in my Discord room, right? So, and it's Monday. I'm a little lazy, right? I've had a couple of good scalps, and you know, so that's me. I tend to get a little lazy. I need to work a little harder. So as the day progresses, I will work on that. Or at least if I'm aware of it, then I know it's like, oh man, I'm getting lazy. Okay, right? You catch yourself. Or oh, you're over trading. You catch yourself, right? That's what I like about being on stream because I get to say things out loud. And when you say things out loud, you actually hear yourself, right? That's why when you have some crazy trading idea, go say it out loud. If you say it out loud and it sounds like you're completely off your rocker, then don't take the trade. You know what I mean? Right? It's like that episode of Billions when they took the pills and they all thought they were geniuses. Yeah, we should do this. Yeah, yeah, yeah. Let's liquidate the fund and buy this. Yeah. Sometimes people get carried away. Sometimes the coffee is just a little too good. So you got to keep yourself in check, right? 70 back down to 64 half. Let's see. Now we're in distribution, right, folks? Right? We have the inventory of the last couple of days, right? Actually, more than the last couple of days. Look at this. Look at that. We have the inventory of one or half, 1, 2, 3, 4, 5 sessions underneath us, right? So we have inventory of 5 sessions underneath us. What we got to do, we got to take this and sell it up here. And so far, we don't have a lot of competition from other sellers. That's okay. That's good. Good morning and welcome to all the folks that are joining us for the first time. They're going to come and sell into this a little bit, right? This is distribution, right? Take it up, you sell into it. Take it up, you sell into it. But you just stop selling right where those size buyers are lurking, right? And the people who short down here will be bid to cover at the bottom of these candles all the way up. Trap shorts really help you. You'd be surprised at how useful having some trap shorts is when you need to sell your goods at higher prices. They'll hold the market up for you. quite conveniently. Yes, it does, Zuzu, because it's written by people who were in it. Were in it. How do you fade this? Wait for the backside of the move, Ivan. Right now, we're in the front side of the move. To fade it, what you need to do is you want to see sellers competing. You want to see that offer moving lower. So watch the minute chart. Do you see this? Why would you want to fade the front side of the move? This move here is not for you to fade. This move here is for size traders to move inventory into, to turn their inventory into cash. Remember, it's a market, not a hot tub, right? It's a market. It's not a massage parlor. You bring stuff in to sell, right? Now, say you want to fade this now. Do you see sellers competing at this point on the 1 minute chart? I don't. When I see this market offer underneath 66, 67, I'd say right here, 66 and a quarter, right? Then we might be in the back end of the move. So you might short 66, put your stop at 70, cover a little at 62 and 60 and 58. But right here, why would you want to fade the front side of the move? Right? They are taking the trucks full of goods to the store to sell it to people. You don't want to stand in front of the truck. Wait till the market backfills, right? If you want to fade this, fade the backfill. There's a front side of the move. That's to distribute inventory. That's not to short, right? If you're building a huge short position of 5,000 contracts, sure. But you've got no business fading this as if you're a retail trader and taking heat. That's just bad business, right? Now watch that offer. Watch it come down. If it can't come down, right, that means they don't have to sell it under 69. Why would you want to fade something where the sellers are increasing price? Because it's got to come back? Because it simply has to? Or because you missed the long? Don't fret. There'll be an opportunity to fade it. You just got to wait. You got to wait for them to put it on sale. Right now, they have no need to put it on sale because buyers are willing to pay up. Does that make sense? Right? Here we go. Here we go. There's a red candle. Let's see. Can we offer under 68 and a quarter? Watch. We did for about a second. There. So now if you want to fade this, you sell it here, put your stop right at 69 and a half, and then cover into this backfill because you're going to have bids here. Do you see where the bids are? Do you guys understand what I'm talking about? Somebody say yes or no. I don't mind repeating myself, right? But if the offer starts moving up over 69 and a half, get the hell out of the trade, right? But you got to be quick because that's one quick candle. This is a quick fire sale, right? And rotation back down. So if you're short 70, 69, 68, right? You're covering in the sixes, put your bids in, right? There you go, right? There's a nice little short for you. That's the back end of the move, right? That's the back end of the move. And if you're short more than 3 contracts and you still got a few, put some bids down here at 62. See if you get tapped, right? Watch them come in. As soon as you're short, put your buy orders in so you can get hit on the way down. Make sure you get paid. Beautiful. See? Front side of the move, back side of the move. Is it hard? Is it easy to actually hit that? No, it's not easy. But nobody said it would be easy, but this is how you do it. This is how you don't get stopped out here. This is when it actually is viable to short because the offer is moving lower. Right? If the offer is not moving lower, don't short it. Now, we came into this area here at 60 and it's starting to lift. Now, if the sellers engage again, we're going to correct inventory all the way back down to 54, right? There you go. Right? 3-minute sale, 72 down to 60, right? And if there's more competition, we'll come back down under 54 quarter. So the move up over the last 20 minutes was an inventory correction higher because overnight inventory was short and we corrected inventory up, right? We got to a point where those traders started to compete with each other at 72, right? And now they come down and sell into it, right? Nice work. Look below and fail at 54 and a quarter. I didn't even have my DOM up. If you're long 57, 58, do a little selling. No problem, Tobias. No problem. A little back and forth here. Because this market is liquidated for quite a few days and it sort of found a temporary bottom on Friday, right? Short covering, which I strongly think this is what's going on. This is short covering before the contract expires, right? That was not a bad short. And not a bad look below and fail of 55 or 54 and a quarter, right? So here's the other good thing about that. If you miss the short, there's always this long, right? If you miss this short, that's okay. There's the look below and fail. So you're buying 55, 56 against 54 quarter, sell a little bit at 61, 62, sell a little bit at 64, 5, right? And just make sure you sell on the way up. Just make sure you pay yourself, right? So when you go long is when it goes from purple to green back to purple. Now, we've cleaned out some trapped longs. We've trapped some shorts under 60. That'll help push price up. Now, when we get up to that A high here, right? Do we actually get do we take it out? Right? So if you're short now, right, your risk is up here at 72, 73, right? And if you're shorting this and if you're offered under 70, you're good to go. Right? Say you're short here. You want that offer now to come down. You need those sellers to compete, lower price, right? Lower price. You need them to get down at least down here. Whoop, right? You want them to come down at least into the 64s, right? So if you're short 68, 69, right? Here's your danger zone. Your danger zone's right there, right? If the offer pops up over 70, be careful, right? Consider yourself warned. If the offer gets up over 71, 72, be careful. Because if it takes out 73, then your goose is home fried, right? It's not a poor high. It's only one. You need 2 half-hour periods. It's not a poor high. You need the A and B high to be at the same place to have a poor high. And if you're short here and the market's lifting, see, that's what I said. See, this is how everybody takes a bad trade. I do it all the time. So what happens if you get into a trade, right? And the offer starts moving up? Well, how much heat are you prepared to take? Because you know your ultimate out is 73, right? So if it comes back and it drops down here and you can't cover, right? Then there's nothing for sale. There's no sense shorting a market where there's nothing for sale. Because when you get this V-shaped recovery, see, boom, it just took everybody's stop. See? If we accept over 73, then the shorts are cooked, right? In the short term, right? But that's how you kind of muddle your way through these trades. So you actually are aware. You need to have some kind of situational awareness, right? You get that by watching a 1 minute candle chart. It's real simple. All you got to do is pay attention. See how it took everybody's stops at 73? And then the size traders just sold into it. They just dumped into it. The problem is shorting here is these candles are big. So you have to have a wider stop, right? Or if you get stopped out, hit it again and then cover, right? But always remember in these markets, because the way of these markets have been structured, even after a sell off and you get some short covering rallies, be careful when you're shorting the short covering rally because we all do the same thing. I'm not immune either. The market sells off, you miss a bunch of really good shorts. By the time you like convince yourself on the weekend, okay, I'm going to short, I'm going to be a short animal. And then that Monday, the market's up 31 points, right? And you're shorting it and being an animal, right? Wait till you identify a seller. When you find a seller, short the hell out of it, right? But if that seller goes away, that's your backup, right? That's your backup in the fight. A poor high or a poor low, you need two of these half-hour candles, right? So if you had a poor high, the A high and the B high would be at the same place or one tick of excess. But when the market's just open, I mean, we've only been open for half an hour. Oh boy, it's a long half hour. Feels like I've been talking forever. All right, point of control. Look at it. It's up there at 68 and a half. If we break through 56.76, do you think we go to 5,800? Uh, ZR1, I have no clue. Bit of a question from left field. I have no idea where we're going to go. If we get above 76, let's look at the levels, right? Like 5,800s is up here, brother, right? So I don't know. We could, but you got to have the order flow to do it. And I have no idea what kind of order flow is going to come in. So that's not how I base my trades. Does that make sense? Are you on board with that? I'm never the honest answer is I have no clue. Right? 5,800 is here and we're trading 56.66. So whether we get up here and what's the time frame? ZR1? You there, brother? Like the time frame today, 2 weeks? Talk to me, Goose. No? Okay. The answer is I don't know. He's probably not even on Zoom. I really have no clue. Can't lie to you guys. And here comes B period. So now what happens? Let's see who comes into the store now in the next half hour of business. What is the Twix? 21. Okay. Right. Don't you think it would be normal for business to kind of slow down before a Fed meeting? Anyone? Bueller? Yes? No? What do you guys think? Right. Kevin, Cape Cod, welcome to the room. All right. Now we're going to backfill that move. Let's see if we get a nice rotation distribution here. Maybe between 60 and 71. Let's see if we get a rotation going. Okay. I'm a reactive trader. Why? Because I control no order flow, right? So I have to react to what the market's doing. See if we catch a bid and move up to 64. Right? I have no idea what the order flow is going to come in. I'm not a genie, right? So I have to wait until and let the market tell me. See? Yeah, I'll read it right after I'm done, Zaz. And welcome to anyone who's joining us in the room. It's good to have you here. Remember, if you need any help, just DM me. I'm around. Hmm. Coming down to 54 and a quarter. Boom, there it is. Now, let's see. Thanks, Sing. So now if we get under 54 and a quarter, you can short it down to the levels. But look at that offer, right? Look at that offer. Do we do another look below and fail? Right? So if you're buying 56 and a quarter, right? I only got one. I'm offered at 58, I'm out. Right? I just I wanted to see whether or not I could get a look below and fail there, and I did, right? Just for a point, right? If you are long, they're going to be sellers right at 60, right? Look below and fail works. It's a nice little trade. It worked here again, right? Just remember to sell into strength. Right? Get paid for your work, right? You will be able to, one day you will hold a trade for 100 points. If you work at this long enough, you will hold a trade for 100 points on a full boat and then walk yourself down to the Lamborghini dealership, right? That's what everybody wants in trading. But some people just want to make a living, right? Now, when we come back down here, do we get the same oomph from those buyers? Maybe not. Let's see. Have we run out of buying over 54 quarter? Do we have to put it back on sale? Oh, still finding bids at 54 quarter, right? We are from 49 to 53. You can tell there's some people trapped short there from the overnight high and the previous day high. They're short from under yesterday. That's why they're bid to cover at 53, right? So once again, long 54, 55, right? Sell them at 59.60. Take the money and run. Next seller is going to be up here, just under 68. How's the coin of bitterness? 82,791. Okay. All right. Coming up on 64 and a half. Position is under us. That's 60. Get out there and sell it. Right. Make the donuts, sell the donuts. Right. See how they're selling it back down? It's okay, Cass. It's going to take you some time. Right. And then you'll adjust. Why do seasoned traders scale out then all out? Because we like to see where the buying is and where the selling is. That's how we used to do it in the old days. So in the old days, if I buy 10,000 shares of a stock, I'll sell 2,500, 2,500, 2,500. So now we're looking for that 67 area. You know, I never look at the VIX. I always look at the VIX when somebody talks about the VIX, and I'll go, oh, yeah, the VIX. I forgot about the VIX. I'm a very simple guy. I just keep track of, I just watch the traffic on the street that I want to cross. That's all I really care about. And back down, right? It's a choppy market. You should sell into strength, right? There's nothing wrong with selling into strength. and back down. Once you find a nice rotation, you can just trade it back and forth, right? If it comes down to 55, 56 and stops selling, you just keep going long off that, selling to 60, 61, 62. Just keep doing the same thing. Make your money. Make sense? Nice work, Tobias. Well done. Take the money and run, brother. I'm answering questions on YouTube because the guys in my room are not asking any questions. So after recognizing a better level on a balance zone, yeah, because sometimes I've been drawing balance zones every day since 2012. So when you first start, you're not going to get it quite right. And even now, like say if I'm a little tired or something like that, and I go to look at the balance zone, I might not get it right the first time, right? So once you kind of dial in, I do not use initial balance. A lot of people do, but when I started profile trading about 4 years in, Dalton said don't use it, so I just said okay. I never asked him why, and it was less stuff for me to look at. So I was like, yeah, sure, man. The less I have to look at, Ivan, the better. The less I need to look at when I'm trading, the better, right? Well, good for you, 1878, or whatever heck your name is. I am not an influencer by any means. Uh, I am not an influencer. That's adorable. Uh, that's hilarious. Yeah, you won't find me dead in a pair of Crocs, Omni. Yeah, to be an influencer, you got to have Crocs. I do not own a pair of Crocs. That's you, man. You know, doing powerlifting and jumping off mountains and stuff. What are you? I'm an old man who's teaching people how to make a buck money, boy. I've been trading for 33 years. I have a trading room. I do a little teaching. I do a little trading. Just live life. Simple, right? If you want to come and hang out at the trading room, please feel free. If you don't, that's fine too. Yeah, I do it for the enjoyment and also because all my ex market maker friends are dead, so I've got nobody to talk to. That's why I like talking to you guys, right? And all my buddies back home are like ex policemen and stuff, and they hate what I do, so they don't want to talk to me about trading. What is my desire for teaching? The fact that I screwed retail for 25 years and choked you guys on bad stock. So I feel maybe I'll try and do something to help my karma credit plan. Because all I did was destroy you guys for 25 years by just blasting bids. That's it. Eric from Spy Day Trading. No, I do not know who he is. Sorry. So that's it. I used to be a liquidator, right? And I like talking to people. I miss talking to people. I miss being on a trade desk. I miss playing practical jokes on other traders, right? I miss laughing, having a good time. That's why I do this. But I'm definitely not an influencer. The only thing I will influence you to do is to be cheap. Thanks, Audi kid. All right, let's see if we can take this thing. If we take out that A high, we're going to run some stops. Right. We take out the A high, that'll create a little bit of buying, right? Just a little bit of buying. Let's see where the other stops are. So we've got stops at 56.82, 56.90, and then all the way at 57.12. Let's see. This market needs a bit of a relief rally. That'll make people feel good, right? People are starting to get a little depressed. So this weird level here is 57.04, just for future reference. If we get up there, let's see. I'm always biased, Jab. I have a problem with bias. So what I do is I let the market tell me inventory was short, so I was long biased. If inventory is long, I'll go short biased. Otherwise, if I get it sucked into a bias and I just disregard it, I'll trade the wrong direction all day. The hardest thing I ever found was being biased and trading against it when your bias is wrong. That took forever. Oh my God, that takes a long time. That's why I had to develop this system. And then, God forbid, I had to be disciplined. I hate being disciplined, right? When I was an institutional trader, I was no discipline. You take 50 million shares, you dump it into a market over 18 months, everybody makes some money and you're happy and you go do the next deal, right? This requires discipline. So we've got sellers at 73, right? If you're short 72, 71, you're looking to cover in the 64s, right? So now we've got, hey, now, remember on Seinfeld? Now you got a nice rack of lamb, right? Look at this. There's your rotation, right? You could just trade that back and forth if it holds, right? And once you got a nice rotation, my system is strictly off the reaction. How else could I trade? I don't create any order flow. Am I trading 10,000 ES contracts? No, I'm a retail trader. Right now, the last couple of trades I've taken, I'm scalping micros. And I will trade ES once I warm up a little bit more. I traded some ES earlier in the morning. And then when I went on stream, I just scalped the micro. And it's still early in the week. So trading strictly off reaction is the way traders have been trading for hundreds of years. You want it for free, money boy? Right? What, I don't deserve anything? You don't like me that much? That's okay. You don't have to pay. You can just join the stream. Right? Just because I have a room doesn't mean you have to join it. We only charge 39 bucks. Right? It's not like we're trying to get rich off you. Right? Right? And I'm not saying you have to. If you want to try it out, sure, fine. If you don't like it, that's fine too. Right? It's okay. You know what? On these YouTube streams, you get all kinds of people. It is St. Patrick's Day, so there are a lot of people out there who are drunk and trading too. Right? Had one of those this morning. Right? Listen, I used to be a bouncer when I was in university. right? Somebody flipping me off on YouTube is hardly a problem. You want to access me personally? Oh, that sounds rather naughty. Sure, just DM me, money boy. We'll chat. Oh god, never a dull moment. Hey, I'm no Warren Buffett. I don't drink Coke. All right. So we seem to stop offering under 64 half. Yeah, I do have. They do work. Yeah, you can DM me on X or on Twitter. That's free. VWAP Trader One. Fire away. All right, let's see if we can get up and over 73, or do we look above 73 and sell back down? Right. So we're just working a box right now. This is a distribution balance between 54 and 73. Okay. Slowing down to a crawl here, isn't it? The more people short it, the higher we can take it. Right? Depending on the order flow, right? You always need the order flow. Everything's always dependent on order flow. I like trading from the outside in of the box. So I like the short, for example. If we go above 73 and come back down, then I'll short 72 if I'm lucky. Well, probably 71, 70, right? Put my stop at 72, 73, and then try and cover 64. I'd like to go long at like 56, 55, right? When it comes back over 56, 55, go long 57, 58, put your stop at 55, sell some at 60, 61, 62, just sell it on the way up. Hmm. Good distribution. Nice, gentle distribution. Point of control is up here at 56, 68 and a half. That means we're successfully selling the crap that we bought on Friday and in the morning up here, right? Profit. Remember, it's always good to make a profit, right? Once these little rotations get smaller and smaller, that's when it's time to go for a coffee, go chill out, go to the gym, do whatever it is you do. So I like to trade when it does the look above and fail. So shorting the backside. I always like to short the backside of the move, right? Because then I know the sellers are there to back me up, right? There's no reason being short if the sellers aren't backing you up. That's dangerous. And this here, no trade. Not right now. Anything else going on? I haven't even opened up my equity chart this morning. What's going on with all the cool kids? Let that chart open up and if the seller's at 73, clear it out. I don't like going long. See, here's the reason I've got these zones too, right? So if my cost basis is here, 23 to 33, this is 2 times profit, this is 4 times profit. I don't really feel great going long in the 4 times profit unless it's at the bottom of the zone to the middle. I am not the greatest breakout trader because, Brett, I've been taught to sell size into breakouts. I don't use fibs. This is VWAP and the 3 standard deviants or deviations. And I anchor my VWAP at 6 p.m. Right? I've always been a seller of size, right? So I've always, when a market breaks out, that's me. I just want to sell into that, right? You've created buyers. Beautiful. Here, take some more, take some more, take some more, right? So I never like to retail trade breakouts. I really love back and forth trading in a consolidation zone or a distribution zone, right? Because your playground is defined, right? Right? Your playground is defined. When it looks below and comes back in, you buy a little to the middle or to the top. When it looks above and comes back in, you sell short down to the middle, down to the bottom, right? Simple, right? Do 2, 3 trades, make a little bit of money. If you scratch on one, and the other thing too is if I scratch more than 2 or 3 times, I kind of chill out because I'm missing something, right? When I get stopped out, it gives me information about the market. And more importantly, it gives me information about whether I'm on the ball or not, right? Because if I'm not trading well, the last thing I want to do is push a bad trading day, right? Sometimes we're not machines, right? We are not going to always be at peak efficiency in the trade. Sometimes we will be trading kind of like crap, right? We're human beings. That's going to happen. So that's why if I take 2 or 3 stop outs, I'm like, oh, you know what? Maybe I should better cool my jets here, right? And listen, I've gone through the same thing as you guys all have gone through. When I started trading retail, I couldn't trade one contract to save my life, right? I could short squeeze 3 stocks simultaneously, right? But to trade one E-mini contract was difficult. I had to figure out a trade setup, how to manage the risk, how to exercise discipline, all that boring stuff that I had to spend so much time, and it hurt because we just sell a bunch of stock and then go to the bar. Retail trading after the close, that's when you do your work, you replay charts, you journal, you do all of that stuff that, on a trade desk, if somebody's keeping a journal, they're like, "What are you doing? Writing poetry?" Right? You don't, it's like that doesn't happen, right? You do your business, you sell stock for clients, you buy stock for clients, you go home. This is a completely different business, retail, right? That was really tough for me. So just take it easy on yourself. I learned the hard way. The only thing is I don't blow up accounts because I'm cheap, right? I'm too cheap to blow up an account. All right, folks, have a good morning. Stay out of trouble. It's going to be a good week. There'll be good opportunity. Just get in, get out, get paid. Okay. And we'll see you a little bit later on. Thanks for joining me. Bye, everyone. Have a wonderful day. Come visit us at Microefutures if you wish, right? No stress. Thanks. Bye for now.